Hey everyone, welcome to today's webinar. We are here with Max Jenkins. He is the VP of Investments and he's the lead of the acquisitions team of his REIT. And he's going to talk to us today about how he got into real estate, his experiences so far, and how you can use a REIT in your current strategy, whatever it is you're doing in real estate, how a REIT can supplement your strategy or really add value to what you're already doing. So without further ado, Max, please tell us your story. How'd you get into real estate?
Sure. First off, thanks, Erin, for having me. Excited to be here. So I guess I had a little bit of a unique path. As you know, West Point grad, did 6 years in the Army and was transitioning out. And I actually thought I was going to go the banking route. So I was interviewing with all the bulge brackets and, networking around, figuring out whether I want to go get an MBA, go back to school, or, go straight into the professional world. And through kind of that path, I got introduced to my current CEO, Pete Mavoides, who's a West Point grad as well. And he introduced me to what a REIT was. And at that time, we were a small private firm that had kind of just gotten off the ground and, aspirations to go public. And so, decided to jump on the bandwagon and kind of take a leap of faith and, join this company. And, the way I looked at it is it's a mix of both worlds. I've always had a passion for kind of real estate, tangible, something you can, grasp with your hands and you can see yourself in person. And then it's a good mix of the financial background and kind of the banking. And it's where both of those worlds kind of meet is, what's the basis of what we do here at Essential Properties.
Awesome. I love it. So explain to everybody exactly what a REIT is.
Sure. So a REIT is a real estate investment trust. You can have publicly traded, which is what most people probably think of. For example, we're on the New York Stock Exchange, ticker symbol EPRT. You have public non-traded, and then you have private REITs. But bottom line, you have to kind of you have to follow all these rules. But the crux is that we have a pool of properties, and then we have to distribute out at least 90% of our rental income as dividends to our investors, shareholders. And you have to have a certain amount of assets. You have to obviously generate your revenues from either interest or rental income streams. And then we're able to avoid income taxes because then our shareholders and investors then pay taxes, corporate taxes on the dividends when they receive them as additional income. So that's the basis of it. And it was started back in, I think, the 60s. Congress enacted a law that, made established REITs, and it's a way for your individual investors to have exposure, diversify their assets to real estate, which is, as everybody kind of knows, it's tough to kind of jump right in, but this is a way to have a share of a pool of assets and diversify your own portfolio and receive, the income stream from, the physical real estate.
Yeah, I like that a lot. I think a lot of people have that initial concern when they're investing, right? It's scary. And I had that experience for sure when I first got started. So many people tried to talk me out of it. Well, and didn't even try. Like they successfully talked me out of it for probably 2 years. And there's this idea that real estate is so risky and most people lose it all. Like everybody just anyone who's not in real estate seems to have this idea that you're going to risk everything and you're going to lose it all. And I heard this story so many times, and it wasn't until I got into it and really learned the power of it and surrounded myself with the right people and saw that was so far from the truth. And it was just people speaking from a fear perspective. So I'm a firm believer in getting to the point where you're confident enough to take action. And to me, it seems like a REIT is a great first step in that. And unfortunately for me, I didn't even know what a REIT was until well into my investing career. I thought it was, first of all, I thought it was a REIT, and I was calling it a REIT all the time. And I just had no idea how a normal person got into that and how all of it worked. And I think that would have given me some confidence. Why do you think that is? Why do you think it's not real common knowledge, and why the information not out there?
I don't know. Maybe it's, it's not as flashy as, a growth stock or something along those lines. But, people probably don't even realize if you have a 401k or some sort of retirement plan, I would almost guarantee that they have REITs as part of your portfolio. So if you go back and look at your 401k, you're definitely going to be exposed, and because it's a different asset class, it's a way to, be counter-cyclical, get the capital appreciation from, real assets and collect that, that dividend stream, because that's how we're judged, right? Especially in the current environment going through the pandemic and, COVID crisis, keeping our quarterly dividend where it is important to our investors and shareholders. And that's, one of the metrics that we are, judged accordingly on and priced. And so to be able to count on that, 3 to 6% yield for a, publicly traded stock should be attractive to investors. And, whether individual investors know it or not, I bet they have some exposure if they have any type of, retirement account.
Yeah, that's a really good point. And I don't think a lot of people realize, in fact, I know a lot of people don't realize what power they have with their retirement account and self-directing. And we just have this idea that we need to put our money in mutual funds and long-term positions, and we just have to accept lower returns. And I love that there's opportunity to do so much more than that. So that's a good point. And I think it kind of goes back to like the lack of information that's out there, and people are misinformed or just uninformed in general. So talk to me about how a REIT can supplement someone's existing strategy and what sort of capital they need to get into it. Sort of what's an entry point, I guess, because I think that's a big concern I have of new investors is how much money do I need? That's always the first question. So can you talk to us a little bit about that?
Yeah, well, it's pretty simple, especially for a public REIT. Just buy our stock, buy a share on, any of the public exchanges. But what I think is important is, to figure out what it is you're interested in getting exposure to. So there's different asset classes, different types of REITs. You have industrial, you have office, multifamily, single family. Most REITs focus on a specific industry, asset class. And for example, at Essential Properties, we're single-tenant net lease. So obviously our asset that we're chasing is a single-tenant and net lease for service or experiential based businesses. So think, we're trying to build an e-commerce and recession-proof portfolio. So we are pretty equally diversified across restaurants, medical, dental, pet, vet, gas station, C-store, auto repair, and fitness, entertainment. Basically, if the customer is required to visit the real estate to get a service and experience, then we're going to be interested in that, which kind of going on a tangent, which I think is a very realistic type asset class for your individual real estate investor, because they're smaller, they're more tangible, fungible real estate with a smaller price point. So it's not some massive office type or industrial to where you're running 15, 20 plus $1 million per property. Our average investment per property is right around $2.5 million, and which is very popular in kind of the 1031 market and 1031 exchange. So we're kind of right in that wheelhouse. So I think it could be twofold for your audiences. Not only if you want exposure to REIT, you can do the research into what kind of asset class and type of portfolio you want to be exposed to. But there are REITs out there that may be doing exactly what you're interested in, which, you can read investor presentations, and you can learn about how the public, institutions such as us are viewing certain asset classes and types of properties, businesses, industries, and, how we're viewing our risk, and where we're investing our shareholders' dollars.
That's really cool. Can you explain exactly what a 1031 exchange for people listening and how that applies to a REIT?
Yep. So, it can be whether it's an institution or a private investor. A 1031 is a like kind exchange. So it's a way to defer, Uncle Sam's always going to get theirs, but it's a way to defer capital gains if you reinvest that into a commercial property. So if I have a QSR, fast food, Taco Bell, that, I own and I sell that, my capital gains, as long as I reinvest it in a, quote unquote, like kind exchange, then I can defer the capital gains taxes on those and push it down the road, which I'm glad we're talking about that, because anybody that is involved in the 1031 market, probably saw the proposal that the Biden campaign just put out this past week. And, that was one of the targets of trying to collect, raise taxes, is to target those like kind exchanges. So it's something to keep an eye on as we head into November, because that could affect, real estate investors that have, plans on, playing in the 1031 market in the future.
So I didn't see that. What is the proposal? Are they talking about increasing the rate, or are they talking about getting rid of the benefit at all, or the?
Yep. So great question. They're proposing, obviously nothing set in stone, but kind of what is out there right now is a limit that if you make a certain, annual income, then you are not allowed to participate in a like kind exchange and defer those taxes. So you'll have to pay the capital gain taxes when you divest of a property regardless. So, that'll definitely affect, it'll probably shrink the 1031 market, which selfishly probably might help us a little bit. It kind of depends. We use 1031 exchanges here at Essential Properties, and REITs do the same, but it also shrinks the, competitor pool that are also competing in the 1031 market, if they're not able to, reap the benefits of the tax advantages. So, we'll see. Nothing's for sure. And as we all know, it takes a long time for something to take effect. But, definitely if you have, your short, medium terms, if you're planning on using the 1031 market, I would definitely pay attention to, what happens in the next 6 to 9 months.
Yeah, that's a really, really good point. I'm going to look into that. And just to kind of simplify it even more in terms of the concept of a 1031 exchange. So if you're, as a real estate investor, if you were to sell a property and let's say you make $100,000 profit off of that property, you can either just pay the taxes on that, which depending on your tax bracket could be 15 or 20%, or you can just buy another property. There's limits to how quickly you have to purchase it. And then also it has to be more expensive or some sort of an upgrade. But like you said, it has to be like kind. So I don't believe you could take a single family and then buy, I don't think you can buy like a 25 unit apartment complex.
It's a good question. I'm not that versed in the, single family, multifamily home. But as far as, where we are in the net lease space, there aren't a whole lot of those type of limits, as long as it's in kind of a similar, industry or asset class. I would say the key point of that is it's only your gains, right? So if you buy $1 million property, you make $500,000 of profit, you only have to reinvest those $500,000. You can still pull the cash out of your principal that you put in. So that's definitely something to take note of.
Yeah, really good point. Yeah, so instead of paying those taxes right then, you just buy the next property and you're basically just deferring those taxes. You're going to eventually pay them, and in one way or another, like you said, Uncle Sam will get his cut. So interesting. Okay, so I want to go back a little bit. You were talking about sort of being able to use a REIT and like what that REIT's invested in to learn. You can kind of choose what type of properties. To me, the benefit of a REIT is sort of the passive side of it, right? Like watching your money grow without having to take a lot of action. So if I did choose to invest in a REIT and I wanted to learn about real estate, what does that look like? Do you like send out reports with all the, how do I learn, I guess, from what I'm investing in?
Yep, absolutely. So, we're publicly traded, and most REITs that you would think of are, and we have an investor relations, and you can go and pull all the investor decks, 10Ks, Qs from all the public REITs. And if you're interested in that asset class, everybody lays it out there, what our objectives are, what goals we're trying to meet, what we're interested in. And, here at Essential, we do net lease, but we focus on sale leasebacks. So we are, searching for partnerships with businesses that want to monetize their real estate. And so we are, focusing on striking long-term, net leases with those tenants that are in our specific industries. And it's a way for them to monetize the real estate to grow. And so we view it as a partnership, but every REIT has, different things that they're trying to focus on and what they specialize in. And, we have to lay it out there for the public because that's, part of the registering with the SEC. So whether it's net lease or office, multifamily, single family REITs, the investor decks will be out there, and, they'll tell you exactly what they're doing, what they're looking for, and, what their competitive advantages that they bring to the table.
Okay, awesome. So how can a REIT or investing in a REIT augment an existing portfolio?
Well, so, obviously anybody paying attention to this is interested in real estate. And, if you want to be passive, you don't want to have to worry about property management. You don't want to have to, manage an entire portfolio and, have to deal with the hard work that goes into being a landlord that, most people probably realize. It's a very passive way to be exposed to a real estate asset and, still feel some of the capital appreciation, get the dividends, that come from your rental stream. And it's, like I said, it's as easy as buying, another stock on any of the exchanges if you want to. Now there's also private. So, if you can go seek out those private REITs, which is obviously more difficult and harder to get involved in, but it, lets you maybe be a little more specific and specialized REITs, or if you know somebody that works at a private REIT. But it's pretty easy. All you have to do is just go into any sort of exchange and buy the stock, and then you can get some exposure to the real estate.
Yeah, I like that. I think a huge concern that I see a lot is when people are starting to get into real estate and they realize how much money they're going to need for their first property, right? So they go put $25,000 down or much more in certain situations. And then they're like, I'm making a couple $100s a month. It's going to take me a very, very long time to come up with the down payment for the next property or the fifth property or whatever, right? And that's a really real concern. That's very common situation. And I think what I like about REITs is that you can take, if you've made $5,000 off of a property, but you need $20K to make your next move, you can take that $5K, put it into a REIT. You're still fairly liquid. It's still growing, and you're still getting cash flow off this other portfolio or off this other property. And you can kind of use both of those together to grow that money and get into your next property faster.
Yep, absolutely. I mean, obviously there's a premium, right? So, we have to, there's G&A for us, and, we have to distribute at least 90% of our rental income. So, you're shelling off a bunch of the risks that the landlord actually takes, but you're still getting some exposure. And so there's an opportunity cost to everything. But, again, I would, anybody that isn't quite sure what a REIT is, if you have any sort of retirement account, I guarantee you, it has some exposure to, REITs within their allocation.
Yeah, for sure. And we were talking earlier about how just the misinformation around this industry. And I remember once I kind of really figured out what I wanted to do in real estate, I would start telling people when they would tell me like, it's too risky, you shouldn't get into this. I would say, well, that the bank is making money off of your money by investing in real estate. So why wouldn't you do it? Obviously it's working and they're the ones making the money, but it's your money they're making money off of. And that was sort of my rebuttal to them. And usually people are like, they never really make that connection, and it usually kind of puts them in their place. So anyway, what advice would you have for new investors? Most of the listeners on here will be new investors. So what would you advise them to do right now?
So I guess it's twofold. If you're looking just kind of, get some exposure in a passive way and you want to just invest your money in a REIT, I'd figure out what kind of asset class you like, what your goals are. For instance, we're in the net lease space. So, some would compare a long-term net lease. We're doing 15, 20 year, absolute triple net to where there's no landlord responsibilities. It's almost, some would consider it like a bond, right? Or if you're in, a little bit more risky assets, then, that could depend on the REIT. But, one thing for your audience that, down the line, if they, end up growing their portfolio and they get involved and they're being, active landlords and they want to diversify out of just, some duplexes or single family homes, and they want to, you know, 1031 it or whatever into a similar, a different asset class. I think I would take a hard look at the net lease space, because it's a way to be passive. There are limited or no landlord responsibilities. The tenant takes care of everything. And for instance, like us at Essential Properties, we're looking for an e-commerce and recession-proof asset like a QSR, a fast food, and you can go back and look at history, and McDonald's and the Taco Bells and all those of the world have been around forever, and so it's a relatively safe asset. And so if you want to take your own personal portfolio and put it into something along those lines in the net lease space, obviously I'm a fan of that sector, and I think it's a great way to diversify your own assets into something that we're confident will be here in the next 10, 15, 20 years, which is obviously why we're investing in it.
Yeah, that's awesome. I agree. And I think just in general, the more you can learn, the more you should feel confident. People are doing well in this industry. It's a proven industry over time. It's all the things that you're talking about. We've been around for a long time, been okay, weathered the recession, made it through. And there's no reason that's not going to continue. So I really like that you mentioned that. Awesome. Okay. So tell us, how can we find out more about your REIT, and how can we get in touch with you?
Yep. So we're essentialproperties.com. And there we have an investor relations page. You can go on there and download all of our, SEC documents and learn all it is that we do. You can look at, peers and other asset classes and do the same thing. My email address is on there. Just go to the investments, and you can, call me directly or send me an email. And by all means, if you're interested in the sector and you just want to learn about maybe more of the businesses and the tenants that we're involved in, and what our long-term views are of different sectors and asset classes, I'm always willing to discuss that and have those conversations, and help out your audience. And I guess I'll give a shout out to Gray Line Investments. So you guys seem to be doing a great thing, so kudos to you, Erin, and your team there. And but whether it's professional or just trying to learn yourself, I'm always open to have those conversations.
Yeah, awesome. Thank you so much. I appreciate that. Well, that's great. Thank you for all this information. Super helpful. I think a great opportunity to just continue to learn and expand your strategy, or at least your potential strategies and opportunities. So appreciate that. And for all you listeners, if you have any additional questions, I'm going to put Max's contact information and all the website stuff you just mentioned into the show notes.